Today, Washington and Tehran resume talks on Iran's nuclear program. This topic will be in focus of oil traders. The two countries may come to an agreement that will allow Iran to resume oil exports. Earlier, the US announced it was waiving sanctions on Iran's civilian nuclear programs. Tensions in Eastern Europe are still high on the agenda. After meeting the German Chancellor, US President Joe Biden threatened to halt Nord Stream 2 if Russia invades Ukraine. As long as there is no clear outcome in nuclear talks and the situation around Ukraine, the oil market is unlikely to start an extended correction. With the first signs of improvement in both cases, oil will probably start to decline. In case the geopolitical situation stabilizes, the commodities market may plunge rapidly. On Tuesday, Brent oil futures are retreating from early highs near the level of $94 per barrel. At this point, the number of long positions has decreased, which resulted in a pullback of around 2%. Despite a downward dynamic, the outlook for oil is still positive and traders remain bullish on the asset. As long as the price is holding below the $94 level, oil is unlikely to make sharp moves in the near term. The quote will most probably fluctuate near the current levels. A new round of growth may start after the price settles above $94.10 a barrel on the 4-hour time frame. Until then, the market will be accumulating volumes. In the meantime, the Russian ruble feels confident and continues its upward movement. It gained support from the recent talks between Russian President Vladimir Putin and French President Emmanuel Macron. The ruble bulls managed to break through a strong resistance of 76 rubles per dollar. This pushed the dollar-ruble pair to the levels last seen in mid-January. It seems that the ruble is now downplaying high oil prices. An upcoming meeting of the Central Bank of Russia is also a favorable factor for the currency. Traders expect the regulator to raise the interest rate. Besides, the central bank has recently put its purchases of foreign currency on halt. The only risk factor for the ruble is the geopolitical situation. If we look at the ruble's trajectory since the start of the year, when it dropped to 80 against the dollar, there is only 1% of a downside risk due to sanction threats. The ruble has managed to recoup the biggest part of its losses. The question is whether it will extend its uptrend any further. Although the greenback looks largely oversold, traders prefer to ignore this fact. If the bearish sentiment on the pair persists, the quote may well move towards the area between 74.50 and 74.80 rubles per dollar. Gold is declining on Tuesday, pressured by a recovering US dollar. Traders are looking ahead to the inflation report in the US, which is due on Thursday. According to estimates, the yearly inflation rate may have accelerated to 7.3% in January from 7% in December. If this is true, consumer prices in the US will hit record highs since early 1982. This data may boost the dollar's rise as it implies tougher measures from the Federal Reserve. However, gold may also take advantage of high inflation since it's widely perceived as a safe haven asset. Despite downward pressure on Tuesday, gold futures are still holding above $1,800 per troy ounce. At present, gold is going through a recovery phase after the recent drop recorded in the period from 26th to 28th of January. At the moment, the precious metal has won back most of its losses, which increases its upside potential. A new round of growth and long positions may come after the quote settles above the level of $1,825 per ounce. This will pave the way towards the target of 1,830. We hope that our review will help you choose the best strategy for your successful trading today. So have a great day and see you back soon.